Hi everyone, welcome to Zreya Wealth channel. I am Dhanendra Kumar and we have Venkatesh with me today, and I hope you have watched our previous video, and we are discussing on a series of content on behavioral finance, and today we are going to talk about mental accounting, and that is also a bias behavior, and Venkatesh is here to help us understand what is mental accounting. So what is this behavioral bias on mental accounting? Can you elaborate, Venkatesh?
Yeah, first of all, thanks a lot, and we are getting into the second video on this series, and I'm sure all our viewers and especially the campus ambassadors that we have got across India is getting benefited out of these videos. And mental accounting, to be precise, is something which is a very important concept for the common man to understand. But unfortunately, if you look at the current scenario, okay, people are more bothered about understanding which investment option gives you much higher return. Okay, the basic question that they come out and ask is like, let me know the best investment option where I can put in money. So before understanding the investment avenues, it is very important to understand these, what we loosely call it as these behavioral biases, and mental accounting is one of the important factor which needs to be understood by every individual. So to throw some light on what mental accounting is like, there is a perception when it comes to money, right? People think about money from different sources in a different way. For example, let me just ask you also the same thing, right? We have worked together in past, and I know you had earned good incentives as well when you were working. So did you treated those incentives the same way, the way in which you had received your salary? Or was there any difference in how you treated the incentives that you earned and the salary that you earned?
I think it as a surplus, or I just account for my salary. So when I am getting, I think it as surplus. So I think something which I can freely spend.
So exactly, this is what is a major aspect of what we call it as mental accounting. So it's a value of the money is same, right? If you had, let's say you received an incentive of 1 lakh and your salary is also 1 lakh, but you treat the money that you received as an incentive in a different way. The way in which you think that is like, that is something which is much more of a easy money that you had received, rather than when it comes to the savings part or investment part, you give more importance to the money that you earned as a salary, but as an incentive you just blindly spend on most of the luxurious things and all, something similar to that. To quote another example, let us say in the real life situation, we would have seen in Tamil Nadu there is no lottery as such, but if you look at other states, especially Kerala, there is a lottery. Okay, and there was a series. Okay, there was a particular event that has been covered by one of the major channel in Kerala, that what has happened to the people who had won something which is called as a Onam bumper. Okay, that is a biggest festive lottery ticket where the prize money was something around 5 crores. 5 crores was something which was a huge amount. So what has happened to these people who has received money from the lottery, this thing? If you look at the history of those people, they had covered 3-4 people who has won these bumper lotteries, and how their life has evolved post that, after winning the lottery. And if you look at in most of the cases, and the sad part is that none of them has got something which you called as a real wealth creation has not happened. Most of them have spent that money in different sources. Few of them constructed a very big house which is still under construction where they couldn't complete, and many others started some business without knowing how to do the business and lost money in that. And the sad part is like, most of the people who has won these lotteries has never become real wealthy over a longer period of time. For that matter, if you look at case of KBC is one of the most famous show, right? Kaun Banega Crorepati.
Yes.
The winner of the Kaun Banega Crorepati himself has come to a few of the channels, and what he has told is like, the biggest mistake or the bad thing happened to me is like winning that 1 crore. Okay, because after winning that, he was not in a position to manage that particular money, how to go ahead with that. But once you get this money from a different source, you treat it as completely differently. Daily laborer, okay, he goes to work and evening he gets his wages. That is something which he will be spending it very carefully. Okay, at least he will park some money for future savings or whatever is required for their house, they will do that. But at the same time, the same laborer wins a daily lottery. the way in which he spends that money is completely different. This is what we loosely call it as mental accounting, how we pursue money which is coming from different sources. That is there. And one more thing is like, until unless, what do you feel? Well, what will make people to differentiate between the way in which the source of money has come from?
Yeah, what I feel is that, as you said rightly, right, people generally might treat it differently. So as you rightly pointed out, in my case, it was like I was also thinking about it. So when we receive salary, we keep it very safe. So when we receive an extra amount, we just, instead of saving it or treating it the same way as salary, we want to spend it on luxury things, right? So this could happen to anyone, not just, as you said, not just lottery. It might be like for film people, like they have people who have lucrative income, or they don't have a regular income, right? So they have, sometimes they have good income, sometimes they don't have. So how they treat their money, so could they also be affected by these biases, and are they making the right decisions? Should they be aware of such things?
See, exactly, this biases comes when suddenly you get a particular amount of money which was not expected, or which you personally feel that it has come without putting in much effort. But the case in which you had told as a film actor or movie actor or something, which they had put in their work and they had earned their money, that might be a different case altogether. To quote another example, which all of the common people go through, is like once you get your income tax refunds. Okay, so income tax refund is nothing but you had paid the tax, and for all the TDS what has been deducted, you might be getting a refund of that. That is also your hard-earned money. But once you get it as an income tax refund, how people behave with that, that is what research says, right? The income tax refund is, again, people consider it as some special benefit they have got, and most of the cases that particular refund, whatever they had received, won't get into their savings or investment option. They slowly start spending it in whatever way they require. So one way to clearly come out of this particular bias is like to have a clear-cut return financial plan in place. Once you receive that money, it has to get attached to a particular goal in place. If you have a goal-based financial plan return, then you will be in a much more better position to control all these kind of biases. Or else it is human tendency to, what do you say, that is how human brain works. You can't help it. So you need to basically understand and control your urge. Consciously you need to avoid these mistakes, so that it will help you in your long-term wealth creation process. That's what we try to do, right? We always try to make people clearly understand to take the right kind of financial decision. Selecting a financial product or putting their money in which investment option is the second part of it. The first part is like, first they themselves must understand how to make informed financial decisions. That is what we are trying to inculcate, and we are trying to spread that financial literacy throughout with all these initiatives. So mental accounting is something which can be controlled, or which can be managed by having a proper pre-decided goal planning and pre-decided budget in place. Once you receive a lump sum money in place, don't get overboarded and start thinking of spending it. Keep that aside for some time, let it be there, and then decide how it can help you out in achieving your goals, or how it can help you out in long-term wealth creation process. Give it some time. On the what we say, it is like you get to fulfill your instant gratification, you just go all overboard and spend it. That is something which is very dangerous for your long-term wealth creation process. So give some time and have a written financial plan in place, have a goal-based plan in place. That is the only way in which you can come out of this particular
mental accounting bias.
So
whatever money comes, whether it is from a regular source or from a sudden bumper lottery or whatever it is, I should treat money the same way.
Exactly. The value of the money is same. Okay, if you have got 100 rupees from a lottery, and if you have got 100 rupees from salary, it is both, the value of both those currency is same, but mentally we treat it in a different way. So that is something, once you understand that this 100 plus this 100 is going to help you out in your wealth creation process, that understanding needs to be there. Once you get that things going, then life will be much more easier.
So thank you, Venkatesh, for that useful piece of information on mental accounting bias. I hope it will be useful for our viewers. I'm sure the next time when they, whatever be the source of money, they treat it the same way, and they do proper financial planning before whatever may be their investment decisions, how they treat their source of money. Viewers, so thank you for viewing this content. I hope it was very useful for you. Please be tuned for more contents on this behavioral finance, and please do share your comments and subscribe to our channel. Thank you.